Hello traders, Jason here. This is a second video to this May 6th edition, and I'm going to go over a few recent swing trades that I've made. So, this one, Radio 1 Inc. Okay, my initial entry was on this breakout back here, above all of these resistance lines and the 200-day moving average. It was a light position. I watched it pull back and did not add on this breakout, which, I mean, there was low volume, so at the time I can understand why I didn't do it. But what we got here was sort of an ascending triangle formation. Then when we broke out to new highs, I added more to the position and tightened up my stops. We basically punched out some nice new highs above some significant resistance areas. And what ended up happening when the SPY started pulling back this week, this position pulled back and tagged me out to the penny. Something I'm going to look into there, because the low 259 is exactly where I had my bigger stop. And I still have a small position in this, and we'll see if we can hold up here and punch out new highs. And if we do set up bullishly again, I'll just add more to the position and tighten up those stops. Here's another one. That last one was ROIAK, by the way. This one is ZIOP. This was a much shorter term trade. I added on this, or started a position on this breakout here. It was actually a rather large position. I'm working on making my position sizing larger as my trading gets more consistent, and I'm learning to manage my risk pretty well. So I figure I can bump up my size and still manage my risk well and take away more profits, hopefully, in the long run. So anyway, I had a tight stop here, just about under 620 on this breakout, and we had a really nice run, which was great, and then we pulled back really hard. When we pulled back really hard, I locked in profits by moving up the stop to pretty much an average true range under that last close, and then soon after got stopped out, and now we're still going lower, so we'll see. I don't know when I'll be adding to that one again, as it's pulled back and showing relative weakness to the S&P recently. Excuse me. Okay, SHOO. This one was a sneak out trade. We had basically this doji right here. I bought a pretty large position right there with a very tight stop, just under the 40 or just under $50, and watched it ride up to about 50 or 53.50 area, and basically I locked in profits at the same time as that other trade, and that was pretty much when the S&P was rolling over too. So basically I took some profits on the trade. It's not something I'm terribly happy about, as you can see, it bounced right off that support and is making new highs right now. So maybe I was a little too aggressive with that stop. I probably could have afforded to leave it where it was, risking the amount that I initially chose to risk, at least until we put in a swing or stopped myself out. So it's sort of an opportunity cost here, because I made about, let's say, $150 on the trade, risking $100 initially, and that was after locking in profits. But right now I would have been up about $350 on the trade, so I'm losing $200 by protecting that $100. I don't know. That's sort of a risk-reward argument that I need to work on, is the opportunity cost when you're managing your risk. I have two more trades to look at, and I'll do that in the next video.